My name is Chad Hart, and I'm an extension economist with Iowa State University. And today I'd like to share with you a brief outlook as we are staring at the markets here in the middle of August. USDA has provided its first real update when we're looking at potential yields across the country and how that's sort of shaping things as we begin to think about harvest season. Now, within those numbers, we had some, let's call it some interesting changes going on as when we look at where we're at right now, we saw some significant adjustments in both acreage and yield. But when you come around to production, we stayed about the same spot where we once were. So let's start with the corn market. When we're looking here, what we saw USDA do is give us significant updates as we're looking at the 2026 crop. Now, here in August is when they begin to massage in data from the Farm Service Agency in terms of that acreage. Now, it's not a complete set yet, but they're bringing in what data they can find there at up to this point. So we'll continue to see acreage likely move as we move into September and October as FSA finishes up gathering all that acreage data and summarizing it, and NASS will incorporate that. This is also the first chance where we see USDA update the yields based upon, in this case, the farmer survey of yields, asking farmers, what do you think you're going to get this fall? And then in the months ahead, September, October, November, then we'll also see them wrap in the objective yield survey, where they go out into the fields and look at the ears and count them. And so we're going to see those yields moving as well. But when you look at what happened, at least here in August, what we saw was that you saw them raise corn area. So in this case, we're up to 96.7 million acres. That is up about 1.4 million from previous estimates that we got back in March, and then were verified in June. But we also saw yields being brought down by 2.3 bushels out there. So we're looking at 180.7 bushels there. Now, those two moves basically offset each other when it comes down to the production line. In this case, those changes ended up adding roughly 13 million bushels to the total. So we started out at 16 billion and we basically stayed at 16 billion when we're looking at projected production. So, like I say, a lot of movement, but we ended up back at basically the same spot. Now, where we did see some other shifts, though, was with the demand side of the market, the gray box down towards the bottom, because we did see USDA adjust not only for 2026, but looking back at as we wrap up the marketing year for the 2025 crop, the crop that we harvested last fall. And the changes were all in the export line in this case. When we look there, they added 75 million bushels to the 2025 export total, so bringing that up to 3.4 billion bushels, by far a record when it comes to exporting corn. Now, as we look at 2026, they added 75 million bushels there as well. So that means that we're looking at maintaining a very strong pace for international sales on the corn side. So when you put this all together, what it basically said is we maintain supplies, but we've increased that usage, and that tends to mean better prices as we're looking forward. And that's why USDA also increased the season average price for 2026, the bottom line in this table, by a dime up to $4.50 a bushel. So we're still looking at very large crops. In fact, the 2026 corn crop looks to be the second largest we've ever produced, but we're still seeing very strong to near record usage as well, with that usage total of 16.33 billion bushels being the second highest usage number we've ever had as well. Those eye-popping numbers continue as we look at the soybean market as well. Here we saw a very similar sort of pattern as we saw with corn. Acreage up, yield down. In this case, there was an additional 1.4 million acres added to the soybean total. So now we're up to 86.8 million. So both crops actually saw increased plantings, shows just how good the planting window was when we look back nationwide this year. As far as those yields, though, are concerned, we did see that yield get pulled down by 0.3 of a bushel, so we're now down to 52.7. Put those two things together, and now we're adding a little more here on the soybean side. We basically, that increases expected production by about 44 million bushels, so we're up north of 4.5 billion. bushels of soybeans. If these numbers hold, that will be the record for us in terms of soybean production. Now, here we also did see some changes, though, in usage as well. As we look down towards the gray box, it was the crush line where the action was in here. And we were adding just a little bit to 2025, but more as we're looking at 2026. They added 5 million bushels to crush for the 2025 crop, but we added 30 million bushels as we look towards 2026. So while I'm looking at record production here in 2026 for soybeans, I am also looking at record usage now that we're seeing incredibly strong domestic usage of soybeans, and that's projected to continue. And a lot of that is biofuel driven here in this case. While USDA is also looking for, let's call it a sizable increase in exports, but not quite the China driven changes that we used to see back in the early 2020s. Now, that will be a big wild card to watch here is how is China participating within the soybean export market? And I'll show you a little data here in a while to show you that they are ramping up their purchases as we head towards harvest. But as we look here, what we see is still stocks by the end of the 2026 marketing year. So about this time next year, we're looking to have about the same number of bushels in supplies in stocks when we're looking there, because when we're looking here, yeah, that production and that usage number fairly close together as they're projected for 2026. But it is the case that we're expected to use a little more than we create. That has helped USDA raise that season average price for 2026 over the past year, but they didn't make any changes this month. So we're still looking at $11.40 a bushel for 2026 soybeans. Now, as far as, this year's crop is concerned, there had been some, worries about what are we seeing, because we have seen, extreme weather events impacting crops across the country. We've had drought over many parts of the country. We've also seen no flooding rains and even, a few derechos moving through and destroying some crops over time. But when we look at the overall crop conditions, and that's what this graphic is showing, is the idea is that when we see those weekly crop progress reports that indicate crop conditions, roughly, a little over 60% of the corn crop is considered good to excellent across the country, and that is around normal. It's a little bit lower rated than what we saw with last year's crop, but still around that average number, and that's what I think is keeping those yields up around that trend line yield. USDA had 183. Like say, Farmer Survey indicated a little bit of a downgrade here, but we're still talking north of 180 at least at this point. Now, in terms of those net state yields, as we look across the country, you can see that, across the western U.S., the drought is taking bushels away from producers compared to last year. But we are seeing better crops as we look towards the east. Here in Iowa, we're looking at a slightly higher estimate here. I think we're 214 last year. We're looking at 216 this year. I'm sorry, we were 210 last year. Now we're looking at 216 this year. If that 216 holds, that would be a record yield for Iowa. And you can see there's record yields projected for Iowa and Illinois, Kentucky as we look out there. But not many records, but some strong yields. You're seeing, over 200 bushels per acre across Iowa, Illinois, Indiana, and anytime when you've got the three I states generating at over 200 bushels per acre, it tends to be a very strong production year. Now, in terms of soybeans, again, sort of similar tale here. Things are around average as we look here and looking a little worse than what we had last year. But if you think about last year, the 2025 crop was a record yielding crop for both corn and soybeans. So it's not surprising we see a little bit of a downgrade there. When it comes to those state yields, again, western side of the country, we're seeing lower yields as you look towards the east. That's where you're seeing those better yields as we look out there. So in this case, I was seeing a little bit of a slip in yields, but we're seeing growth in Illinois, Indiana, Ohio as we look towards the east. And overall, that sort of balances it out as USDA made a slight adjustment down here. Now, In terms of our usage, though, like I say, a lot of the action is really hinging upon export pace as we're looking forward here, with corn experiencing a really strong run thus far, and soybeans having been on the back foot here for a while. But as we look at the last few weeks, we have been seeing some improvements, some gains in the international marketplace. So this is looking at advanced sales, so purchases of the crop that's still out in the fields right now that will be moved to them once we harvest here. And in this case, the black line is our 5-year average on these advanced sales. The blue line shows you 2 years ago, the 2024 crop. The green line is the 2025 crop last year. And the red line shows you where we're at so far with the crop that's growing out on the fields right now, 2026. And as you can see, we started out really slow, like the 24 and 25 crops, as we move through spring into summertime. But as we've gotten to July and August here, we've watched those sales pick up, and now we're back up around that 5-year average. Who's driving this on the soybean side? Well, it is China. They have been stepping in. In fact, I believe 3 of the last 4 days I know of, they have made purchases of over 100,000 tons in the soybean market. So they are still flexing their muscle as the biggest soybean market in the world. As you can see here, out of those sales that we've made thus far, China is responsible for 45% of them, Mexico 13%. And I will also tell you, China is probably most of what we see and what's labeled as unknown there for unknown destination, because historically 90% of those unknown destination sales do end up in China. So we are seeing China being active here, and that's boding well for soybean prices as we move from the fall into winter. That we're seeing not only domestic crush rising here for soybeans, but hey, we may see China willing to buy more in the coming year. That double barrel of corn or soybean usage moving forward is definitely going to help the market. Now, when it comes to the corn side, we have also gotten back up to that 5-year average. It was around this time last year that we saw export sales really take off for corn, and those continue to be fairly strong. Now, in this case, as you can see, this year we're at the 5-year average, so not quite as hot as what we saw last year, but we're still seeing really good sales as we look out there, especially continuation sales, given that the export sales out of the 2025 crop have been at record levels. As we look at those sales, Mexico is the biggest part of those at nearly 40%, but you can see it is our bigger markets that are usually, they're stepping in. Japan, South Korea, Colombia is one that I know I've highlighted over the past year, that there's a market that is relatively new to the scene when you're looking at our big markets, but they have been really consistent in buying corn for the past few years. So we are seeing those international sales really starting to heat up here as we prepare for harvest. And that's usually what happens, because if you think about it, when do we tend to see our lowest prices in the market? It's right around harvest, and that tends to bring in a lot of international, let's call it consideration of U.S. crops, because they're looking for those good pricing opportunities to capture our commodities. So as we're looking at where the markets currently stand, we did see let's call it a very positive push right after a report. We saw some profit taking the day after, but when it all sort of settles out, we're still looking at what I call the slope of hope when we're looking at both commodities right now. Futures prices that are looking to build higher as we look further and further out. Now, in this case, the green bars were the futures market prices as of August 13th. And you can see there that we're talking about December corn weighing in just over $4.70 a bushel. And when I take an average basis off these futures, it indicates a national average cash price of around $4.70 a bushel, which would still be 20 cents above USDA's new estimate for that season average price. So we're still seeing a little bit of a boost here from the market, due to, one, these wars that are still going on, two, concerns that weather can continue to wear down on those yields, and I think three in this case is that continued demand, usage growth as we're looking at exports, because as we look at livestock feed and ethanol, those remain strong and steady, so that exports is really what's helping us chew through what have been some record crops over the last few years. When we're looking at the soybean market, we have a, let's call it a smaller slope of hope, but it is there as well. And especially as we look out there, it's nice to see some 12s on the board when we're looking at prices there. Now, as far as a market estimate of that season average price, it's weighing in at around $11.50 a bushel, so about a dime over what USDA is currently projecting. And I think it's, being supported by some of those same things that corn is. We're looking at the wars are still out there and impacting prices. We're looking at weather conditions could still pull down yields and, mean smaller supplies. That tends to lead to higher prices. But it's also this idea that usage is continuing to be very strong. And if we can get both biofuel demand going at the same time that China is stepping into the market, it does bode really well for soybean prices. And so this year has been incredibly volatile in terms of those prices, but a lot of that volatility has at least been working in our favor here when it comes to selling corn and soybeans, that we are seeing some pricing opportunities that we haven't had in a while. Now, costs are going up. In this case, what I've got for you with that big black line there with 440 on the left and 1115 on the right-hand side, those are our estimates of the 2026 production cost estimates that we created in January, that we're above those levels. And so if you were able to lock in a lot of your input cost very early in the year, or especially with fertilizer, if you were locked it in last fall, you're in a really good spot right now in terms of pricing. On the other hand, we know those costs have gone up as well as we've moved through 2026. And so hopefully these rallies that we've been seeing here are giving you opportunities to get above break even and take advantage of those opportunities. But at least what we're seeing right now suggests that, yep, we've got another set of large supplies coming in. What is comforting now, though, too, is that we're also seeing usage for those crops being very strong as well, helping start to bring prices hopefully more in line with our cost as we move forward. Well, with that, again, my name is Chad Hart, Extension Economist with Iowa State University. I want to thank you for your patience and your time.